I mean, one of the names that stands out for me is Kroger, which everybody put out for dead after the big buy of Whole Foods from Amazon about a year ago. Stock went from 29, got all the way to 20, bounced back up, and here it is at 29 again. But I think that one makes sense. I think they're able to compete. And as long as you can compete in today's environment, I don't look at somebody like that, Kroger, for instance, as a defensive stock. But, you know, let's not just totally push off to the side. Technology had a great day as well. So it wasn't just, I mean, there was defensive names, but technology was off to the races once again.
But when you talk about names that are defensive, Pete talks about a name with a story behind it. So when you look at some of these other names, these food stocks, they have stories behind them too. So you see M&A in the space. Technically, they look like they're breaking out. Utilities, to me, is what Pete said, defensive, but they could pass on the rising rate environment to clients, to customers. So I think that is a defensive play that I would stay with. The other ones
food stocks or not.
Food stocks, case-by-case basis. I would have to look at technicals because we truly don't understand how long that M&A pop can last in a defensive world that we're living in now.
I know AT&T obviously has a world of stories around what's going on there, but AT&T and Verizon and a lot of the big div stocks and a lot of the big yield plays in telco and utility land, I think we're hammered. And I think we're now getting this kind of relief. I think it was overdone. I think people realize, we've talked about it in the last couple of weeks. Look at that 10-year chart. You may have a head and shoulders. You may see rates going back to 260. I think we will. So, I mean, I think that's been a major boost. Yes, you've had the backdrop of global trade wars be a reason to jump into some of these things. But as Pete pointed out, I mean, you know, the semis have been pretty badly beaten up. But if you look at triple Qs, we're still, you know, bouncing along in the 50. That's a chart that's not really in trouble to me. And I think I'd rather own that in a difficult time. We said those are defensive stocks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.